Happy Friday, traders. It is Friday, the 22nd of May, 2015. It's 8:02 a.m. Chicago time. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Again, it's Friday right before Memorial Day, Monday. Monday's a holiday. First and foremost, a reminder that today is a full day for equity products, a part day for interest rates, and a couple other products. On Sunday night, the market opens as usual at 5 p.m. Central Time, but on Monday, the pits are closed, cash is closed, and equities close at 12 Central. So an abbreviated schedule. Even though it's closing at 12 Central, the market reopens and the schedule resumes as normal at 5 p.m. Central on Monday with the Tuesday session. So let's take a look at what we've got as far as news. A lot of news flow out of Europe and Japan. Japan's BOJ keeps monetary policy steady and upgrades its economic assessment for the first time in 2 years. The Bank of Japan policy decision to see has set a policy decision to see the U.S. dollar Japanese yen pair pull away from the 121 handle. This sent the U.S. dollar reacting downwards to this news. The EU leader summit in Riga making little new progress in Greece, as opposed to, although a government spokesperson said that Greece is very close to reaching a deal. German Q1 GDP confirmed quarterly growth at a modest rate. German finance minister reportedly discussing the option of a parallel currency for Greece. ECB's Draghi made some comments overnight. Persistent low potential growth will make it hard to work through the debt overhang that exists in the parts of the Eurozone. ECB policy not constrained by a lower bound. Economic outlook better than the past 7 years. Inflation expectations recovered from trough. Again, it's not limited to any method or instrument for doing its job, is what he said. Looking at the CPI numbers came out at 7:30. April CPI month on month came in 0.1 in line. Ex food and energy slightly higher, 0.3 versus 0.2. And what else is there? I don't think there was anything else. S&P fair value negative 2.8. We saw the dollar and the S&P react to that CPI release. Looking ahead, what's on deck here? Pretty much nothing. 9:30 Equity weekly numbers, noon Baker Hughes, and then of course Fed's Yellen speaks at noon in Rhode Island. Everybody's probably going to be very attentive to that. But other than that, pretty clear calendar. And again, it's a holiday Friday, so volume is likely to be pretty anemic, as many participants have already started their Memorial Day weekend. Memorial Day here in the U.S. sets off the first weekend of the summer. Basically, this is when pools open and so on and so forth. It's a big deal. Yesterday's volume, as I'd mentioned, was pretty anemic, was well below the normal, what we would consider the first standard deviation, or what's normal. Let's have a look at this chart. This is our composite chart with each bar representing a day, RTH day, and you could see here the volume yesterday on the pit session was 669,000, with you can see the profile here giving us the first standard deviation of 806,000 to 1.6 million is what we would consider normal. The most common value is 1 million. contracts a day. So yesterday was well below the what we would consider to be the common and also below the low end of normal. I expect, and what does that tell us? The move up yesterday, frankly, I fought the move up. I did take a live trade in our chat room and walked people through it, but um, it's it was very slow and not so deliberate to when the market was trying to push up. So my plan for yesterday, and let's look at what we talked about yesterday versus what actually happened. The primary hypothesis yesterday is that the market's likely to be somewhat choppy, but I expected resistance in the 25-26 area, and I expected the market to rotate down and to target 21.15 quarter and 21.10. That was the primary hypothesis yesterday, and overall, it looked pretty decent. It looked pretty okay. The opening was an open auction in range, so there wasn't a driver, but we did get this big 5.5 point rotation, and we chopped around from there. And then I read this move and failure here as a continuation or an extension of this big rotation up and a potential area to fail. And so I got short. I got short looking for 25 initially, the mid, and then the opening swing high at 23, and then of course I was looking for it to rotate down. It was very choppy. I ended up losing a little bit on that particular trade, and that's fairly common. Win or lose all the time. My losses have to be a lot smaller than my winners, though, and that's just the nature of trading. I'd be a liar if I sat here and told everyone that I win 99% of the time. That's absolutely not true. Risk is always present, and that's why I'll take a stop when I need to take a stop. But in any case, overall, the trade was it was so choppy. The trade was actually pretty salvageable, and didn't do too poorly. But the idea behind this short was to trade off of that primary hypo and look for a rotation down. It just did not happen overnight. So the market ended up going back to yesterday. The market ended up having an inside day. It did play out all of the key statistics that we watch for, and it had an inside day with the point of control shifting out of value upwards, but overall we have balance. So what we've got is balance since the 18th, since Monday. This whole week we basically traded sideways. You can see the point of control up here at 26, down at 23 or so, or 24, down to 23 and a quarter, and then back up to 28. The market seemed to accept higher value yesterday, but overall it has not done anything. It has not done anything worth that is of any significance. Of course, we pushed all-time highs, 21.32 and a quarter. But overall, yesterday, it did not accomplish anything important, and it's not expected to accomplish anything important today. Although I've traded through some pre-holiday Fridays where it just seemed really thin, and the market did move quite a bit, especially over the Christmas holidays. It does that. So the overnight session was very balanced. It was trading 26 quarter all the way up to 31, again inside of the prior day's range. Very balanced profile, and then it dropped here on the 7:30 CPI numbers and has formed a second distribution. So now I'm watching 21.27 for clues on a retest. An impulsive move down on news. Potential for a small continuation, but we also have to watch the scene of the crime because it is a news-based move. The market might return up to 21.28 where it came from. But I'm watching for 21.27. As long as 21.27 is not breached today, I'm looking again. I'm looking for a short rotation down, except today Anything below 25.50 has a very thin profile underneath it and is likely to see some follow through. So let's look at it from yesterday. We have a single print right here, 24 and a quarter. Anything below 25.50, this ledge here, 25.75, anything below 25.50, as soon as it prints 25 quarter, this is likely to start working its way back down to 21. So my primary hypothesis today is for it to be, again, fairly choppy, given the holiday, given that volume is likely to be very, very low. Um, but if it does move, I'm looking for a downside movement today again to keep this in balance and to basically play the same thing that we've been playing for the last few days, which is up, down, up, down, up, down. The point of control for this area is 24 and a quarter. Again, 25.50 is the beginning of the singles, and not much more there. Anyway, it's 8:13. I started 2 minutes late, but I have about 4 minutes, and I want to dedicate that to a very interesting comment that was made in an email that was sent to me yesterday, which I've seen several times. And the comment is that this person is trading really well on sim. Everything goes great. Very disciplined on sim, goes live, and you've heard the story probably 1,000 times before. You go live, and somehow, some way, things go way wacky. And that just goes to show you that it's not hard to get an edge, in my opinion, as long as you're managing risk, but it's very difficult to deal with the emotional aspect of trading, and that's where a lot of your focus should be if you're learning or if you're inconsistent or suffer from rough patches like most traders do. The comment that caught my attention was a statement that said, "I just don't trust the market," or "I just don't trust prices." And it goes to show you that folks are still considering the idea of being emotionally involved in trading, which is inevitable because we're human. Our goal is not to avoid emotions. It's ridiculous to think that somehow you can control your emotions. What you have to do is be aware of your emotions and to have a plan for them. I could tell you as a person who's sat through prop traders making the turn, and others, and for myself, emotions wreak havoc with your performance, and so it's important. It's not realistic to disregard them, but it's really important to focus on how do I feel? Like, am I anxious here? Why am I anxious? And to make sure you have a plan for it. It's almost like I don't know, I just watched the Avengers with my kids a few days ago. It's kind of like the Incredible Hulk. You're aware, Bruce is aware he can turn into the Incredible Hulk, so you just need to make a plan for when that happens, and make sure that there are some fail safes, and that's where your risk plan comes in. The important aspect is you don't have to trust the market. This is not about trust. This is about probabilities. I don't have to trust that the ball is going to fall on the number that I chose on the roulette table. My bet is based on what the probabilities are of hitting black or a red or whatever number I choose. It's a probability-based game. You don't have to sit there and trust the market. If you trust the market, you'll find that it betrays you and it causes even more fear because it's not something that is there to be your friend. It's just a mechanism for price discovery, and it is the aggression of one side or another that's causing that price discovery to move one way or another. So people anticipate price will go up at least 2 ticks to get into the market, and and long, and people anticipate the prices will drop at least two ticks to get short, one to get in, one to get out at a minimum. So there's no trust here. So don't play this game with yourself and with the market where it's you're creating a personality out of it. It doesn't have a personality. It's like a beast. It's like an animal. It follows certain patterns and certain things in nature, and you have to plan for it. Just like if you're an alligator handler, you don't have to trust your alligators and turn your back to them. What you have to do is be aware that it has certain behavior patterns, and you have to plan for those behavior patterns, and you'll probably be okay. Same thing. I just want to make sure and emphasize that this is not about how you feel towards the market. This is not about how you feel at all. This is about probabilities. That's one of the key elements that separates professionals from those who are struggling, and those who are creating conspiracy theories and creating these stories about the market. No, they saw me, man. They're keeping track of my position. They must know, my broker must know what I'm doing, and that's why he's moving the market against me. Total nonsense. Oh, it's a stop run. They're gunning for stops. They're looking for stops. It's just an auction. So plan your trade and trade your plan, and be aware that your emotions create a lot of noise that actually is irrelevant. That's why when we're out of a trade and we're back to our calm, mindful selves, we look back and say, what was I thinking? I can't believe I missed that. It's because the person who is trading in the middle of a trade and the person planning and assessing the trade afterwards are slightly different. Our state of mind is slightly different. So no, you don't have to trust the market. You don't have to trust price. What you have to do, though, is trust that you will do the right thing. And the only way to do that is to create a plan and make sure you follow and stick to habits. I trust myself. I trust that if a trade goes wrong, I will take myself out rather than sit there and hope and wait for it to come back. I trust that, and therefore I can act, and I don't have to worry about what will happen if things go wrong. Things go wrong and against me all the time. I don't have to worry about it. And so a lot of times we place a lot of emphasis on fear, on the fear of things going wrong, but actually in reality, it really isn't all that bad. Whatever happened isn't all that bad. And I did that demonstration in our chat room here yesterday to show that even though my price wasn't very good, and I immediately said, it looks like I'm early here. Um, it really didn't. It's not like I needed to stress out of it or fudge my way out of it. It's just a matter of assessing whether the context or the plan has changed. If it has not, there's nothing for me to do. And then stick to your plan, and that's it. My risk is defined. Everybody knew where I was going to get out if it was wrong, and that's all there is to it. I know this is off topic a little bit, but it's really important to pass that on to a lot of people who are listening in. It's just about probabilities. Your emotions have nothing to do with this. Your emotions are just something that is there. It's a mechanism that has existed within us for hundreds of thousands of years through our evolutionary process. It's there to protect us. It's important to be aware of it, but it's not necessary to react to it. Just like we don't let every little thing upset us through our day. There are some things that merit our attention, some things that we're aware of, but we don't respond to. The same kind of thing works in trading. I hope I'm making the point clearly. I'm using a lot of analogies, but this is really important because as I watch traders at stage 5 and I manage risk here, I notice the same patterns. Doing great, doing great on sim, which is emotionless, but overall, when I go live, I don't have I don't have the results that I expected on sim. Even if I penalize my exits and slippage and so on, I cannot duplicate those results, even though the simulator is copying what the market is doing. As long as you're penalizing your exits, then you're accounting for your placement in the queue to get filled. And that's just a fact of life. This is by far, as a prop shop owner, This is by far what I spent most of my time, effort, and investment in with new traders, is getting them to see things for what they are and seeing the market as a big set of probabilistic outcomes, with every trade having a very discrete 50-50 outcome, every single trade, no matter what you do. So risk control, make sure you understand context, make sure you follow your plan, be aware of your emotions. It's not necessary to respond to them. Good luck. Have a wonderful and safe weekend, and I'll catch you on Monday. Take care.